Let's see. Live chat. We're going to put on... Happy Black Friday, everybody. Good morning. Give me just a second here. I'm trying to get everything up and running. Okay, so give me just a second here. We'll go over everything real quick. Gonna bring this is a 15-minute chart, just if you guys want to know. Anyone that's here right now, good morning, everybody. Good money morning. Hold on a second here. So we're gonna go over a few things. I've got the news up for you this morning, so you'll be able to hear the news. This is a 15-minute chart. I don't know if I can get a nice, maybe I can get a nice 5-minute chart up. That can squeeze it all in. Yeah, I don't think so. Maybe. Let's see if we can get a 15-minute chart in there. There's a 5-minute chart here. This might help. Hold on here. Yeah, that's pretty good right there, actually. Or do you guys want a 1-minute chart? We could do a 1-minute bar chart possibly too. Let's see what we can get in here. See if we can get a one-minute bar chart for the day. This is kind of cool. We can probably do this. Hold on a minute. Oh, that's almost perfect right there. That's a 1-minute bar chart for the day. Here's R3, R2. I didn't put in any of the previous lows, so in your own charts you probably want to put on some previous lows and stuff. But this chart does have at least our support. The S3 is down at the bottom right over here, S2, S1, pivot points. We're still above the pivot point at this point. So I'll leave this paper chart up for you so you can relate it to the BOOKMAP chart and see where real support is, that kind of stuff. You can kind of see where my cursor is, this 400 down here. This is kind of a magnet down here. So just by looking this morning, it looks like there is like some kind of a magnet down at 400. Maybe that's where we get our R3 today. We certainly don't want to break this line down here. If you look on BOOKMAP, you can see that solid yellow line down below. And you can see the heavy sellers on BOOKMAP as well, much higher up here, right? So I want you to pay attention to that today. I'm going to leave up. So I have a bunch of stuff I have to do for next week for the stream and for the newsletter. So I can kind of streamline this stuff and let it come out every week just consistently for you. So you'll have that done from me by Monday. So today, if there's anything huge, I'll stop in. If I have the time, I'll try to stop in and comment if it deserves a comment this morning. What else is I going to say? If you want, I can quickly. Well, hold on a second. Good morning, everybody. If you're all joining us right now, good morning to you. So this stream, if ever I have something else I have to take care of on a day, you'll see something similar to this. You're going to get a better BOOKMAP version of BOOKMAP as of next week, and you're also going to get Trade the News as of next week. So you're going to get the best news service. So if I'm ever not here, okay. So just for today, this is what'll be up. You can listen to the news in the background. It'll pop on and off as the news comes on. I would expect a light volume day today. Just like I expected that too on Wednesday, but we didn't get it. But today, it's a short day, only till 1 p.m. They could pin this market sideways right into the close too, just to make sure that spreads print for banks. So be aware of that. And this should correspond quite well right here, right? Doesn't correspond perfect, but you can kind of see where that a second. Let me see if I can get it to correspond better. Yeah, so it's not perfect, but wait a minute, hold on a second. So that R3 or the S1 is, yeah, it's not gonna correspond well. But you can see down here that 400. I'd be paying attention to that. You can see, or it's the 4,000, and that's right here. That the yellow bar at the bottom of BookMap is right here in S1. Markets look like they're supportive. The only concern again is above up here, where my cursor is, that you can see all those bars above, right? It's at 40.50, and that corresponds to that 40.50 corresponds to somewhere in here. This R2. Currently, this is where the sellers are. They're right there. And the buyers are down below, somewhere right here for today. Now, of course, as you get into those levels, you can see if we break through or break above. But this is generally where it's at right now. Just be conscious of that this is what it corresponds to, BookMap. Maybe we ping pong around and make a move higher or lower into the close, but there you go for today. Good morning to all of you. Please feel free. Good morning, James. How are you? Please feel free to, if you're going to tune into this broadcast for the rest of today, this is a good day for you to take the time to meet each other in the broadcast, talk inside the chat, talk about trade setups that you're interested in, and have people here backtest them for you. Don't feel hesitant. It's okay to be wrong, and it's okay to ask, be like, hey, I want to take a put spread against the market. I thought about taking it right here today, or I thought about taking it once we hit the top of that channel of the downward overall trend since the beginning of the year. Ask people in chat today what your trade or what you're thinking about for trade setups, and see if they can punch bullet holes in them. See if they can say, yeah, but this, or yeah, but that. You guys don't want to lose clout or ego, but why do you care about your ego or clout? Care about making money. That's the most important part. Because at the end of the day, let's say your trading plan is wrong. You have a bruised ego, let's say, or a bruised id or something. If you make money on that trade because someone showed you a better way, that's all that's going to matter to you. When your ego is put aside and your clout is put aside, the only thing that ever matters is making money. And if you leave by making money, fuck your ego and fuck your clout and fuck what you think is your brain is telling you is the right way. So take the time today, talk to people in the chat, backtest in chat trade setups that you're thinking about, so that you guys can try to make better trades. Okay, as we head into the close of this week, this is a perfect day heading into a Friday, short trading day. Start bouncing off your trade ideas with each other, because you'll get some positive feedback. This group of traders that are here, investors that are here, they want to help each other. I've been in a lot of discords, and I've seen so many shitty discords with real fucking assholes. Sorry for swearing. Day after Thanksgiving. But our Discord, our group, our trading group, they help each other. So be open to trade ideas. Be open to thought processes that can go against what you want to do, so that you can think of all of the pitfalls in your trade. Even if you're like, I'm going to stay with my trading plan, at least you have some outside thought process so that you can look at the speed bumps along the way in your trading plan, or the pitfalls that could arise in your trading plan, for when to cut it loose, or to take profit, or to add more to your position if it leans into your thought process. If you're a new trader and you're tuning into the broadcast, this is a perfect day for you to throw some stuff out, some questions out there, ask questions, see if someone can help you out. So that as you come along in the next few trading sessions, you can catch up with us and see where we're at, in our trading plan, our trading view. Just for I'm going to do a quick review for where I'm at, so that you guys can see where I'm at for the. I'll bring this back. We'll do this because I want to show you where I'm at with the market, right? So I posted this on Twitter this morning, and we'll look at a monthly chart here, and you can see if there's a few key things to see on this chart that I'm showing you here. Hold on here. Hold on a second, because I can't see that on my end. I'm seeing something different. Okay, so the key thing for me is that we know that we're still in an upward trend here. You have to respect that. Okay. We're selling the top of the trend up here, right? These are the major channel that we're in. So is it still viable to trade up here? Sure. What do I want to buy? I want to buy down here. See this little green thing? I want to buy that. But I want to buy down here somewhere. I'd love to buy the bottom of this, and I'd like to buy the bottom of this because there's another smaller channel. There's another smaller channel within a channel, right? You see that smaller channel that's in here too. So I can buy in safety down here, right? I can buy in safety here. I can buy in safety here. Now, if you're a bear, you know that you're already trying to sell this down, right? With no huge committal. This morning, Peru put out a post saying we should ricochet off here and start selling heavy.
The German government's planned skimming of windfall profit from elections.
I'm going to pause that. So that was his point this morning. My point was Dixie's showing a different story, that we could actually break out up here. We could actually roll over, but still break out up here. I should be clarified. There's some real room for up and down in this move up, move higher. Now, my point, though, is this. If you're bearish here, I respect being bearish to here, but then I'd want you to pull off and check. You'd want to see the trade down, a breakthrough, right? A retest, and then the next move lower, right? So you'd take that next trade lower. And then with confidence, you'd short the market here into, December, January, March, whatever. You want to see this break here. Now, if you don't see that break and you're a bear and you want to go full on bear, then your real target is up here. You want to see us trade above to the larger downtrend from the beginning of the year in January, right? Couple tests down here and then take that trade way lower. That makes sense to you. Or at least take it to here and then jump back in it with commitment down here. So it'd be like a two move, right? You'd see 1, 2, or 2 rejections. You take that move down, get out of your position, and then with confidence short into January or March. So there's a bunch of different choices that, choose your own adventures here, even as a bear. If you're a bull, for me taking trades, I always like to win. So I'm not interested in this right here. I'm not interested in this grind up here. If anything, I'm interested in shorting this down, shorten that down, or buying a dip down here, or buying a dip down here, if that helps you out at all with your trading plan. So for me, I've got nothing for you today in terms of where I think the market goes. Likely the market is down from here, even if my point this morning in my post was, let's say we squeeze up here, right? We get that squeeze. There's still the roll here or to here is safer for me than this little bit right here. So I'm not interested in trading this at all today. I want the safety of the trade. I want to take a trade and be like, yeah, I've got high confidence conviction in this trade. So it's not meeting my high conviction confidence to take this last leg up higher. Okay, so with all that said and done, we're going to go back to the 1 day on the 1 minute chart. We'll go back to a 1 minute chart on the day. Let's see, back at a 1 minute so you guys can see if we got that there for you so you guys can actually trade this for the day. There's our 3. We're right there. We'll bring back up BOOKMAP for you. Hold on here. I got some funkiness I got to do. And this will show you, at least for today's trading plan, what's going on. If you missed what I just said, pause the broadcast, go back, and just watch what I just talked to you about, and then catch back up, refresh your page, and catch back up to the live stream. Let me see if I can get this looking nice for you guys so you can see the actual moves throughout the day. Right about there. So you guys all copying this? Oh, me? I'm not from Texas, but I have lived down with Texans. I was in the military, so I have a really mixed. I feel it's not context. It's syntax to my speech. If I've been drinking, y'all sound like I'm from Boston. But I've lived all over the place, so I pick up different syntaxes. I've lived everywhere. I've spent most of my adult life. My profession, I mostly moved a lot for my profession. I would help companies that were failing to not fail any longer. I'd come in as a team, and you'd pay me to turn your company around or make sure that your company didn't go bankrupt. So Tesla, yeah, I can go over Tesla here if you want, real quick. Hold on, let me see if I can bring it up on another instance here, and in the background, let me bring up a. Hold on a second here. Give me just a second, and I'll review Tesla with you. You guys want to hear Tesla? I'll do Tesla. Seeing as we're focusing on Tesla, there goes the sell on Tesla. I posted the video this morning, right? I said that's kind of funny. Okay. So we'll look at Tesla real quick. Give me just a second here. Just a second. I'll bring Tesla up for you. Okay. So let's look at Tesla on a larger time frame here, okay? So Tesla is in a downtrend. We know that, right? Talk to you about. I talked to you a few times. Larry Williams has said this as well. Tesla can decouple from tech, and we've seen that decoupling in other tech stocks as well. Tech could actually come back, and Tesla would continue a downward path into January or March. So be careful of being stuck on Tesla. You know, has to follow tech and all that kind of stuff. I've posted in the past instances where Tesla has decoupled, and you can on your own look and see that Tesla has decoupled. There's only a few tickers left in tech that have not repriced themselves if we do make a move. Now, when you see moves like this, right, you see it says big move down here, right? And you regain 50% of that move, right? You get another move down, you regain 50% of that move. So can Tesla come back to 190? And I was talking this morning about maybe 193 down the road. You might catch that 193 on that next move higher, okay? This move might not be done going up, but you're looking to buy a bounce down here to take that last bit of the move. So yeah, can we go to 190 one more time? Sure. Do I think that Tesla's done going down? Fuck no. And for Tesla not to be done going down, it needs to break out of that channel and then resume higher for you to get long-term bullish on Tesla again. Know that as a Tesla bull. If you're out there saying the retrace is over on Tesla, you can't say that until you break out of the downward trend, consolidate, and make a move higher. Do you understand what I'm saying? You can't do it until that happens. Nobody can. There's nobody out there with a crystal ball saying it's done with Tesla. This is bottom. And if they are saying that, the technicals do not agree with you in any way, shape, or form. So you want to see that, okay? So what I want you to say, so if you're a Tesla bull, what I want you to know is on a smaller time frame here, what are we looking for on the smaller time frame? Okay, we're gonna be looking for. We already just broke. So this is a 5-minute chart. Let's get a 15-minute chart, right? And this is what most traders trade, 15-minute charts, right? So let's look at Tesla. You want to see, right? You want to see. So we have the 600% up here, and then 193 above. Let's look at that 193. If you want that, see that green line right there? See that 193 over here? I want you to see that on the chart, right? You want to see where that roll should come in down the road, right? We're looking forward right now, right? We want to see, at least on a 15-minute chart, no break of it, right? We want to see this white line right here, this green line, this blue line. We want to see some kind of a capture and move higher. Okay, this is what you want to see for Tesla, gang. Now, if you can get over here and keep moving higher, we'll discuss that down the road if Tesla gets back in line and starts to regain itself. But for right now, if you're a bull, the only thing you're looking for here is you're looking for some kind of a dip buy and a move into that 193. That's what you want to be seeing. This move right here. So, put your blinders on. Don't be listening to people on Twitter and on fucking CNBC, and don't be listening to like Tesla Q, Tesla Bulls. Don't bother. Your next fight is right here. Trading this up to 193. You want to talk about higher than 193? Then you have to retake, or you have to break out from this downward trend here for Tesla. Until that happens, don't be listening to anybody. And for Tesla bears out there, I wouldn't be huge short here until we get up here. If bears really want to be getting crazy, it's over here. So right now the ball is in the bull's court to buy a dip down here. This is where the ball, right? So we sold this. The bears sold this, right? Or longs sold this, and now longs are looking to buy down here. If they can buy this down here, the bulls are in charge down here for sure. At this moment, bulls are in charge. It's a matter of risk for you to buy down here as a bull and trade this up. Bears are still not in charge. If you want to know the answer, they're not in charge. This is a moment for bulls to buy another dip, run it up, and then for the bulls to take, or the bears to take over. If the bears want to take over, it's definitely up here somewhere. This is where the bears want to step in and take over. Okay, I call them bears, but these are algorithms, not really retail bears. This has all to do with algorithms and banks. So banks and their positioning and where they want to buy the dip and the real dip and all that kind of stuff. So just be conscious of Tesla over the coming days and weeks or whatever, and think about your risk appetite, where you want to buy the next dip on Tesla. Does that help you guys if you're looking at Tesla? Hold on here. Is that helping you guys out there? Hey, Dan, good to see you as well. So I covered Tesla for you. So today today, tomorrow, Sunday, I'm working on getting the stream, getting a better news service for the stream, getting a better version of BookMap for you guys, the very expensive version, and getting a legit newsletter out to you guys every single week by at least Sunday, if not Saturday. I'd like to get it out after Sunday futures open, so I can get you better technicals heading into the rest of the week for you. It's it's really weird. It's hard. What's difficult to getting a newsletter out. The best newsletter you could put out would be after 9 a.m. on a Monday, because you've got resets in the Greeks for the week, but people want it on Sunday. So I don't know. We'll talk about that later on down the road if you prefer. I'll put them out on Sundays, and if they're not doing well over the course of a week, maybe we'll shift it to a Monday morning type deal. I'll put place markers in, and if we get a wild swing on Sunday futures, either up or down, maybe I switch to a Monday update at least every week or something like that. Because there are technical things. Not technical. There are there's data sets that come out on Mondays that are important for you for a weekly time frame. Good morning to all you guys. So this is up for you. I'm going to put the news back on for you here so you can hear the news. Expect some a ramp in what this stream is going to be. And we're also going to do a bunch of interviewing and stuff like that. We've got interviews lined up coming down the road for you on slow trade days, stuff like that. You guys have your levels set for the day. You've got where the big sellers are for the day, where the dip buys are on the day. This should help you trade the rest of today. And if you are just joining us, earlier in the broadcast, I went over my view on the markets on a larger time frame chart, a 1-month chart, to give you a larger picture of my thoughts on where the market is, where the market's going. That should encapsulate for all of you, without even having a weekly newsletter. That should encapsulate my view on the market right now. And if you have a chance, take a look at my public Twitter handle, just Google search me, Captain Jim James. They posted about Dixie this morning, and that post about Dixie is correlating that you got people saying the 2000 crash, 2007 crash, we have way more down to go. And there are other, not just Dixie, but there are other indicators that are more consistent that are saying that we are in a localized bottom. That last 350 tap we had, and then possibly another test of 350 and even 3200 into March. It's like over a 6-month period, we might be bottoming. And Dixie's showing that as well. There's some, and then what's neat about that post about Dixie is if you see Dixie break down anytime around this price level we're at on Dixie, it would confirm that bottom. If we find huge support here right at 106 or so, it would confirm that we're not bottomed yet. Now, there are other indicators. I talked to you guys last week about unemployment, showing if we're going to roll the market over. So you can start getting a toolbox together. I talked to you about if we break 10,000 on NDX, right? So you can make yourself on your own time a little checklist as I roll this stuff out to you. You can say, yeah, Cap talked about if we break 10,000 on NDX, we'll see 6,500. Cap said, look at unemployment figures for when the market truly rolls over. Cap said, hey, look at Dixie and what it wants to hold. If it finds support at 106 or if it starts to break down from that 106, what to expect out of the market. You start looking at these indicators. We'll add them all up as we head into March and see. It should give us some kind of a lead into where, on a macro sense, where the market's actually heading. Make sense, guys? Right on, Tony Chase. So I'll be tuning in with you guys. If we have any huge moves today, I'll try to get back on live with you guys throughout the day, if it's possible, if I have the time. Otherwise, have a great Friday. If you can, I would say don't trade today. I would say get off the internet, take this nice long weekend, recharge your batteries. We have the whole month of we've got JPOW coming out. We've got the whole month of December. Into the holidays, into Kwanzaa and Hanukkah and Christmas. So we've got some. If you were to take a breather, today and Saturday, Sunday is probably it. So happy Thanksgiving to you out there if you celebrate it. If you don't, happy long weekend. Yeah, I'll post the Discord link right now. Okay, or I'll attempt to post the Discord link right now. Yeah, so I've run different computers on the stream, and on this stream I don't have a Discord link. So what I'll do is on a different computer, I will. I don't know if I can. What I'll do is on a different computer, I'm going to post the Discord link publicly on Captain Jim James public profile on Twitter. So if you want to join the Discord, I will post the link right now onto publicly for people to join. It's good for one day. You won't be able to go back and use it in a day or two. So I'm gonna check out right now. I'm gonna post it publicly on Twitter, and you guys all have a great weekend. I'll see you guys on Sunday. You can see a squeeze is happening right now on BOOKMAP. Hopefully this we get that rip higher today. Take it easy, guys. Man, guys and girls, whatever, ladies, they, them, whatever you guys are, whatever you guys identify. I will be checking in with you later. All right, I just posted that on Captain Jim James. You can just Google search me. My handle is AJIMJAME 74888 But just Google search me, and you'll find me. That's the best way to find me without. There's some scammers out there that try to pretend that they're me on the internet. They're not me. There's only one Captain Jim James. Later.
Looking now to the fear and greed index, 64 out of 100, which indicates agreed, with the crypto fear and greed index at 20 out of 100, indicating extreme fear.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So Poland seeks German support for EU sanctions on the northern section of the Druzhba pipeline. Poland near agreement with Germany to be coordinated of seaborne oil for Germany via Gdansk port.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Just coming in and checking with you guys right now. Not a whole heck of a lot going on in the market today, as you can see. Just that middle of the low volume. Not much at all going on in the market.
Germany's Chancellor Scholz says the German cabinet has approved the gas price break-in expedited process.
It does make you wonder if there's an argument for some flies, some one-day flies in the market or condors. Yeah, market closes at 1 o'clock today. If any of you guys are here in the background, I'm off today. So just the stream is up. If you pause the broadcast and go back to the beginning of it, I do a macro review on the upcoming month and the market. I do a review on Tesla as well, so you can rejoin the live stream. This broadcast is only up for you'd have access to BOOKMAP, the news, and the levels for the day. Let me see here. Why does market close early today? Due to the U.S. holiday. If anyone didn't answer that for you. Yeah, it's 1 p.m. Eastern Standard Time, New York Trading Time, Wall Street Time. Depending on how you know it. There could have been a pretty decent. I probably should have said that this morning. There's a fairly good chance of buying a condor or a fly today. Nice wide fly and print out by the end of the day. Sometimes you get a big move in the end of the day as those get closed out, but generally it looks like a low volume day. Yeah, happy Thanksgiving to all of you guys that are out there. Your mic is cutting out sometimes, Cap. Yeah, I've turned my mic off. Stepping away from the desk, so I'm not here with you today. I was just checking in after an hour or so. Check on the markets. But I will be taking the rest of the day off. The live stream will stay up. You can listen to the news. You can look at the levels and BOOKMAP for the day if you're trading this. Yeah, happy Thanksgiving, Yuki. Hey, Winky, happy Thanksgiving, brother. Hope you had a good Thanksgiving. Not a whole hell of a lot going on in the market. I'll take a look around and see if there's anything worth taking a peek at. I don't think there's much. B&O sold off. They traded all the way to 30.50, 30.45. Wonder if there'll be some more weakness in that trade and then look to rebuy back in. Take a look at the market here and see if there's anything that's standing out to me. Hold on a second. I'm going to look somewhere else too. Let me scroll through here and just see. Yeah, even the big movers aren't that big. Southwest Airlines is moving. Ralph Lauren, Delta Airlines, Norwegian Cruise Lines. Bath Body Works Incorporated's going down. Apple's going down. We already know about Apple. That was big talk. Netflix is going down. That put spread that I posted was prior to market open. But you would really want to buy that put spread at the top of the key, right? You want to buy it up around.
France's Deputy PM Bourne says US Inflation Act must not distort competitiveness.
And you could do it. The only concern, and my other concern is this. is my other concern would be, why wouldn't you just wait? Why would you buy the 259 on the put spread? What is the rationale? So there's a good question on that. You could do anything that you wanted. You could take you do a put spread on much lower numbers, right? Like three, or the rationale behind that put spread was Well, let's start at the beginning. So Puru was pretty much saying that we should keep bouncing down off of the 200-day moving average, and he was relating it back to 2000 to 2002. And so I went back and looked at the chart pattern for 2000 to 2002 and overlaid it over the decline that began January 4th, 2022. And so the implication is and I'm not saying that this can't happen. Even Dixie, if Dixie was to reverse course, we could go into that major decline. But some of the arguments that are out there, Mike Burry, perfect example, are stating that we're following what happened in 2000. So the implication would be that we're going to crash into March, and it's going to follow a similar pattern to 2000 to 2000 to 2002 decline, and that this is not a localized bottom. So if we're playing chart patterns or not chart patterns, but candlestick patterns, the bottom is implied to be at about 2600, 2500. So if you were to just catch the roll at 405 or so, it could. This is before market opens. So if you were to wait, let's say, to put that spread on until whatever the top is, and in this trade higher, let's say it's at 406 or 420 or whatever the fuck it is, you could still trade that spread down. It would be it implies a 28% move down into, I believe he's saying, March. Now the chart pattern shows 2024, I think, as being that bottom, not March. But his implication was we'll see a bloodbath in 2023. So I was trying to relate it more geared towards what his implication was, that we're going to have a crash in early 2023. I don't see that happening. I'm not going to take that trade either. Or maybe he was implying we go to 3,500 or 3,200, then 2,900 or 2,600, I think it was, 2,590. The market's not implying. The dealers don't think we're going there in March. So that was the only reason I posted that. I wouldn't take that trade. I don't even think that the Mike Burry trade is the Mike Burry trade, like, you don't know how short I am. He could be short down to 3,500, pull it off and say I got mine, or I closed out. He'll tell you 3 months later that he closed out. So he can make that statement and kind of be right to an extent, all the way down to 3,500 or even 3,200, but the implication is that we crash. Like, we're going to have this nasty crash down into 2023. I don't think we get to see the crash. I'll agree with Larry on that. I've been stating that for weeks, probably a month, though. I think all the way back to September or October 8th, maybe October 8th, early September, I was saying the timing's not right. And I still believe that. Still want to see the timing isn't right for employment numbers. So you kind of want all the ducks to match up. And if those ducks aren't there, you kind of... The other thing, too, is people say it's not bearish if the Fed pauses or Fed lowers rates. It is bearish. But we haven't seen that yet either. So we haven't seen, like, these major things to say we're crashing that nasty at this point. If anything, some of the numbers or some of the data points are saying that this is a bottom. Yeah, why better than, let's say, 400? Well, I think so. When you do that debit put spread, it starts printing. It'll print some of the trade from any, like, if let's say we trade down to 350, or let's say we trade on a 3500, it'll still print. So the trade prints and will keeps adding money as we go down and decline. So if let's say we stop at 350 or 3200, 320 into March, you would still be able to capture a percentage of that trade. You wouldn't capture all of it, but you would still be in the green. So that's what the idea behind the spread is. As long as we go below, trade lower. It doesn't have to actually tag 259 either. They could just tag like for 3200 or 3500 and it would still print. Not a ton, but it would print. But this is for doomers out there. There's some doomers out there that are claiming that the market's going to crash. Although I'm not saying that I disagree with them. I'm saying that it's not statistically or in a probability sense the right trade for right now as we head into this key resistance at this downward channel.
At 11 a.m. Eastern Time, we get Canadian budget balance prior minus 2.45 billion.
I'm going to turn that down a little bit. You'd want to trade it to confirmation to the legs to each level, right? You'd want to see us reverse on the large channel. You'd want to break below this channel we're in, and then take it down to the bottom of the downward channel. And then if you think we're going to like 2,900 or some nonsense like that, 2,600, you'd re-enter the trade once more at that point. You just take it step by step down. And as a matter of fact, if you do that, right, just looking at the decline this year, it would make sense, right? If you were to look at the decline for 2023 or 2022, you would enter the top of the trend, shorted or buy puts, and you'd end at the bottom of the channel, roughly, not the full channel, because we haven't hit it exact each time. So it's like it's the meat of the trade in the middle was where the money is at. It doesn't seem like the top of the key or the bottom of the key is where the money is at. And it hasn't been like that all this year. And I think that's the idea. And that brings up another subject, which is what does a bear need to make it profitable? So there, I'll posit this. I'll posit this to you. Hold on a second here. Because this is just a mind.
This stream is sponsored by TickStrike.
I realize that
allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Let me see if I can bring this up on a different chart here. Give me just a second here. One more depth. This is a good one. Okay, so you have to look at this too from the perspective of we have this we have a pretty significant decline here, right? And I guess the thought process would be, let's say we come up and over and we roll down and retest this 350. That would be like the third time, right? 1, 2, and 3. Or you have this last little capitulation move, and that's your 3, right? So you'd have that. You have this being 1, being 2, and then your third one, let's say it goes down to 3,200. Well, this goes against everything in the bear case. So that's posit number 1. Like 3,200 is not good enough, right? Does that make sense? But you do get. But if you're a bull, you're like, I got my 1, I got my 2, I got my 3. This is my, and winds up being my capitulation move. Sometime in March, we could actually bring it back here. Someone like this, something like that. You get your 1, 2, and your 3, and this is like one thin red bar down, and you're off and running. But this was your bottom. So if you're looking back in time, you're like, shit, I missed that bottom being formed. If that makes any sense to you guys out there. Now, the one problem we're running into as we roll this over is The one major problem for the bear case is this isn't good enough, right? You need like that death nail in their view. You need this. You need that because it becomes less profitable, right? If you had this major decline here, this is very profitable here, right? This major decline. So they need this other major decline. They need more, right? It's always more, and that's for bulls too. Because what you don't want to do is get bulls thinking about, oh, this is a bottom, because you could just start buying in here, and you'd be good until like 2025, let's say. And I think that's what my posit is, that the timing's not right with companies going bankrupt. The timing's not right with let me see if I can show it to you this way. So if you're attempting for those three levels, which you start to do the percentages, right? You're like, what's the percentage chance we go down here? Pretty good. What's the percentage chance? Or actually, I should say this. 3,500 was actually
11 a.m. Eastern time. We get Canadian budget balance prior minus 2.45 billion.
This 3,500 was a high percentage trade. This was like a I think it was like back in January. We ran the numbers on this. It was like a 85% chance of us hitting 350. 320 becomes like a 50% to 35% chance, and then you get like 15% chance down here. Hold on, get rid of this. You get like a 15% chance of somewhere down in here, and you get a like a 3 to 5% chance that that you're anywhere below this number, which is and how you come down to this 1,600 is how do you find that 1,600? And this is all based on time too. This is how the bears are finding that 1,600 is. They're looking for this one right here. I think it's this one right here. Somewhere right down there. This is what they want. This tag down below. If you see this, how this is heading down. That's why they're talking to you about this 1,600 on SPY. You guys can see that. I don't know. They want that bloodbath at the end. Now the problem here is the percentages go down for that further decline as we trade down here, or the chance of it even happening. And then you don't want to see bulls get dip buying happy, right? Because they will as we trade down here. Bulls be wanting to buy it. Now, just the timing of what's going on in our economy makes you wonder, and even Dixie says we're at a bottom. Just saying is flashing that we're at a bottom. But let's just say we get that March buy, right? And it's a bounce here, or even a bounce down here at that 3,200. And employment's still strong. Let's say employment's still strong. And we've done the damage. Let's say we've done the damage with we've done the damage in the economy. We've done the damage to companies, but we're not going to see it for a couple of years. You would see that move higher until we actually realize that economic destruction, and that would take us into 2025. And this is what Larry Williams is talking about. He's talking about us heading up again into 2025, and then a slow rollover at some kind of an all-time high. So I don't know if this chart's not showing it, but I guess in your imagination you could somewhat see a move higher, and then in 2025 we actually get the big roll down, and you see Jim Bob and Mikey Billy and Mary Sue all lose, and it's kind of neat too because you'd start to see people's cars. I had this thought this week. I was looking up a story that had some comments on it about car values and when they're going to. Let's say you get everybody losing their jobs. The housing values have come down enough. Mortgages have come down. People are ready to sell for a new home, let's say. They've grown into a new home and can't afford it. Right now, everyone's just bought all their homes. So let's say 3 to 5 years from now, people are growing out of them or aging out of them. and the housing market's still too high for them to buy into, jobs start to become scarce. So like the timing, every time I speak to you about the timing, right? The jobs start to become more and more scarce. People are laying off, that kind of stuff, and they can't afford a car. And then if they own a new house, and let's say they're going to buy a new vehicle, and vehicle prices are still out of control, and they're like, okay, I'm going to go back and buy this new truck, and now I can't afford a $150,000 truck, and my $150,000 truck that I bought before is now worthless. It makes that sense to get that big roll. And it's what's crazy is the bears would still more than likely, or that bear concept would still, you'd get that huge decline, but they would still not get that doom that's portrayed, right? That you'd end up seeing, and this is what Larry's point at the end of his video was, right? For decades, I've heard them talk about this. And so it's like out of your grasp, right? For the next 3 to 5 years, you end up, or next 3 years, let's say in 2025, whatever decline that would be, we never actually broke that 3,200 level. And so this would snatch
minus 2.16 billion, minus 2.16 billion.
This would snatch out of the hands of bears that full death and destruction that they're looking for. And I think that was the point he was trying to make, that what Larry was trying to make. And I think that's part of the point of you really, between now and March, you really want to put your blinders on to both bulls and bears that are perma on this, just a continuation. But keep your eye on the prize of, this is the prize to be looking for, as some kind of a reversal coming into March. Either here or here. I'm not really concerned about this right here. This happening. If it presents itself, I'll take it up. But I'm looking at instead of this nasty perma bear and instead of this nasty perma bull, it's kind of like that middle of the road trade somewhere in there coming into start of the year. And it makes rational sense. And you know what? I would say this. If I was looking for this kind of a bloodbath down here, we still haven't seen what was going to cause that. There has to be some things happening, and those things haven't presented themselves yet. So this is bound to change too. If those things present themselves before we get there, sure, I'll jump right on. I think that's why it's key here to, until at least March, look for, or to trade the levels. Be prudent in your what you're stating, because right now Mike Barry's saying we're crashing, the whole system's crashing. And when it does crash like that, in the past when it crashes like this, usually have months to years to get in on this part of this new trade, this new zone lower. There's a ton of time there. I think that also works itself out with NDX. Oh, hold on a second here. It's the same thing on NDX. You were looking for that bloodbath. You are looking for, that break of 10,000, right? So if you want to start talking about market crashes and market collapses, you kind of need this to happen, and it hasn't happened yet. Otherwise, you see that, and this is a good way to look at it too. I mean, you want to start talking about this. You don't know how short shit I am. He should be posting that shit. Like Barry should post that shit. Like when we're like right here. You don't know how short I am. He should post that shit like right here. It's not the right place for him to be posting that shit. Like, you don't know how short I am should be like right fucking here. He posts that as we start this move lower. I think it's kind of fucking nonsense that he posted that shit, because that would be the same as, you don't know how short I am. Should have been tweeted here. right? And should be tweeted here. Does that make sense? Not fucking right here. Nobody gives a fuck about that stupid fucking post right here. Does that make sense? So you're on a larger time frame, level to level. Not right fucking here. It's fucking stupid. Sorry. I don't know if that helps you guys or not, but does that give you an idea of when you hear people post that shit? Why? I mean, I don't know why. I don't know. I'm trying to figure out in my brain sometimes why people post that stuff publicly. Yeah, he likes to get free coffee mugs. Yeah, there are always levels in between. So when you're looking at like a 5-year, 20-year, 10-year, and you're like, yeah, he's calling for something that, you know, you don't call until you go down there. You kind of want to like break through that first major level to be, you don't know how short I am. Like, come on, Barry. If you were that short, if you were that fucking short. And then the other problem with that statement too is you as a, let's look at that chart one more time. You as like a retail trader, you as a retail trader, if you think for a minute that your broker is going to allow you to, let's say, even trade down to here and then absorb all this before it rolls down here, you're going to get margin called, and they're going to take your everything, your house, your wife, your kids, and everything. Mike Barry could go borrow fucking millions of dollars to stay in his position for the next 3 years if it doesn't work. But you as a retail trader, then it shit ain't happening. So use some small trader think you're going to call up a fucking prime bank and be like, you know, just like the fucking movie, you know. And Barry's been wrong a lot too. Most people are wrong a lot. Even Barry's, you know, when you look at that actual for what Barry became famous for, that motherfucker was wrong on that trade for like 4 or 7 years, something like that. So think about that time frame that he has and the resources that he has to be right. Like eventually you'll be right. Yeah, I just didn't like the tweet. I thought the tweet was a little too bombastic. So and there's a lot of big follower accounts that are, you know, there are big follower accounts that are saying melt straight up to the moon. You got big follower accounts saying we're going to crash and like mega crash. And the last thing I want to talk to you about that is, I think I mentioned it, but I didn't harp on it. And that is, there's a ratio of potential profit for how much farther down we're actually gonna go to a swing higher. Does that make sense? So a bank, big money is going to look at or can get greedy and be like, well, we're going to go here someday. Oh, wait a minute. Let me mute this. Like a big bank can be like, yeah, we want to be here someday down in here. But we just had this beautiful, you know, we just made bank down to here, let's say, right? So let's do a 50% retracement, right? 60% retracement of the whole move. And then we'll send it down later, you know, a year or two down the road into 2025. See, if they're manipulating this market, if the Fed's manipulating the market, if the banks are, because the banks fucked up so bad back in 2007, and if they're having private meetings with the Fed and with the government and saying, well, you know, we'll play ball so we don't actually kill the market and have people in the streets with pitchforks and you know, torches and stuff. We'll play this decline, but we want to trade it. You know, They'll make this initial year move down. You'll get a large retracement, and then we'll make the final move down to a lower number in like 2025. That would be the that's people talk about like the manufactured market. That's possible. We've moved into an attempt. Doesn't mean they're going to be successful in it, but it does mean that the application of a fucking Ponzi market would mean that they're going to try to attempt to never have a 2007 again, at least in the time where people are still alive that experienced it. So you have maybe like people that are like 50 to 80 years old. They're saying, well, what we'll do is we'll manufacture this decline. We'll spread it out over 3 to 5 years, and we'll all play ball to it. And you know what I mean? So they're like, so if they're playing ball on that, they might look at an end of year decline here. Let's say it is down to 3,500 or 3,200. They might say, now we'll trade it up and we'll capture this big move higher. We'll catch everybody off sides, and then we'll dump it again, even deeper, down to that 2,900 level or whatever that number is, 2,600 or whatever, like in 2025. So just trying to think about the big players, how much manipulation comes into or is in the market currently from the Fed, from banks, from the government in general. And there's some other things we don't know about. We don't know how the election is going to go. With the presidential election, you're going to definitely see people coming out to run. It reminds me of the 80s with Reagan, right? If I'm not a Republican, just so you know, but if let's say the Republicans come out with, it would be easy for the Republicans to run a candidate that's a populist. Let's heal everything. Let's heal a rift. It's a no-brainer. I mean, everybody's like, yeah, it's going to be DeSantis. It's going to be Trump. But the reality is, I'm sure there's someone out there, some planner that's saying, we're going to run a populist. They call Trump a populist, but he really did divide people. If you had a populist Republican came in and he told Bob and Mary that, you know what I'll do is I'll fix the economy and, we'll do all this stuff. You could see a repeat of the 80s. And the market's going to go to the effing moon, right? So it's a no-brainer that they would run something like that. And that's 2 years from now, right? That runs into 2024. So if those elections start ramping up and you start seeing even just the hint, like if they fucking fart running a candidate like that, and that candidate's out there stumping every day saying, I'll fix the stock market, I'll fix your pensions, I'll fix your 401ks, you're going to see the banks will attempt to run up the market. So we've got that. We got the end of the war in Ukraine ahead of us still. And as time passes, that just creeps and creeps on a move higher. So we have some catalysts down the road for a nod to a bull run heading into 2024, 2025. Yeah, so you guys want to look at what I'm trying to do? I'll tell you what I'm trying to do. on a long trade. Hold on, I'll bring it up. What do I want to see? I want to. We'll do it right now. It's a good time to do it. It's a fucking slow ass day. Do it right now. Do it live. This is basically what I'm looking for. Let's line it up. Let's set them up. Let's do it. Okay, let's call this Okay, so this is March 31st, right? I want to buy a put spread. On here. Or let me draw some boxes so I can publish. I'll end up publishing this. I think there's a high likelihood, not think, I think there's a high likelihood that we can see this here, right? It will at least come back down here at some point between now and March. At least here. Wait a minute. You guys can't see that. Give me a second. I think there's a high likelihood we come back down here at least to here in by March. That's the minimum. So what do I want to do? What I want to do is I want to wait until we hit hold on here, let me get rid of that. What I really want to do is I want to buy somewhere at the top up here, like 412, 406, 412, somewhere in here. Oh, hold on a second. Somewhere right up in here. I want to buy a put spread. And let me see if I can draw one up. It's tough to draw one up without hitting this number here, but let's just say we did a 409. Let's say between 406 and 412 and a 370p. Put a date of March 31st on it. It's probably March 16th. It's probably wherever the let me look and see where let me look at the I want to say I'll get a better date for you. Look at the OPEX calendar. You want to tighten it up a little bit, I guess. 2023 OPEX calendar is March 17th. So right there. If you wanted to put the 31st on it in case they don't print it until after, that would make sense. But something like this I'd like to see. Something just like that. Seemed right now bears are saying it's going to happen before December 15th, right? They think it's going to hit. I guess it would print, right? If we did roll here and go straight down into December 15th and we nailed it, you would print that that put spread by December 15th. If you were to buy it for March though, it would give you the time that you needed to print. Now, if it started hitting already, you just close that trade out. You could even take more if you wanted to take more down here to open up another put spread here. But I think that's a really safe trade. And the reason I like the more time on this trade is because the bullish bets can be more irrational longer, typically, than the bearish bets. They can usually stay up higher longer. The bear bets usually come straight down, then we bounce. So I like more time on put spreads than I do on call spreads. It tends to be, not always, but it tends to be more irrational longer on a bullish bet than on a bearish bet. So I think that's a pretty safe bet. It's not 100% guaranteed going to print, but it's fairly good. Fairly good bet to bet this into March. And you're not asking that much in this trade. It's not really that much of an ask to think that we're going to have at least something like this at some point. Does that make sense or no? And I would wait for this trade, or I'm waiting for this trade until we at least get up. It's got the price is going to change as time passes, but it's somewhere up in here around, like today, it's about 408. If we hit 408, I'm going to put that trade on. And the cool part about that trade, too, is if we break above and make this slingshot higher, you're still going to get a roll at some point and be able to print that trade. Does that make sense? So you wouldn't sell this trade. You would diamond hand it if it went the wrong way against you. You would diamond hand it right into March and see if this would print into the 31st. So this is the one. These are the trades, like with the trades down here, and the trade's up here, and the trade's down here. What you do is you place that trade on a different account or a different brokerage that you don't look at, and you set a sell price on it, and you just don't fucking look at it. Set an alert for your for your email, your phone, or whatever. You don't even look at these trades. You just place them, and you go about your business. You day trade all in here, and you just hope that this prints. And normally, something like this these kind of trades are the trades that keep your account alive. These are the trades that are, they usually keep you funded so that you can make bad day trades and risky gambling bets. These are fairly safe trades, fairly. Now it's been fairly safe all year, right? Now you can be proved wrong. You might, let's say, you win 1, 2, and 3. You lose your 4th. That still makes you a 75% of the time. So you should have started up here, of course, but it's. If there is a turn here, we should still at least at some point come back down here. And what we could also look at would be we could look at just a simple moving average too. And we could change it to the 200. See if I can sauce that up a little bit for you so you can see it better. Can I make that thicker? Somewhere, I forget where to make it thicker, but whatever. For right now, that's enough. So you can see that this is what Pura was saying, was that we ricochet off. He's claiming that before we'll ricochet off. We should see this before we hit this channel. So he's claiming that right now you should be buying your put spreads today. That's what one of his things he was saying was we should ricochet, and that's right where let's see where that is today. That would be right at 404.80. So I'm saying 406. So maybe you listen to him and not me. Maybe you just start putting that trade on right at 406 or 402. Looks like it's 402.48. He's claiming. And this is going to change, of course. 402.47. He's saying put the trade on. That we're not even going to touch the top of this key. He's saying we're going to bounce right off of that 200 moving average. So yeah, if you wanted to put it on here, it's still a safe trade. Put it on here. You can put it on at a higher rate. It's whatever your risk tolerance is for that trade, but somewhere in here. This is close enough in hand grenades and horseshoes that you're probably going to nail it between now and March. And spreads, once they come into the money, you don't need to hold them to close. They'll just start printing for you. That's what I like about spreads and big trades. See what you guys are saying. Twinkies point on buying double put spreads. Do you like the idea of buying a 4742? Do you like to keep the buy side? Do you like to keep the buy side of a long-term spread closer to in the money? I'll usually run through a bunch of different trades. Like this trade, when I eventually put it on, I'll try different strikes, and I'll also look inside the options chain and see where all the money is. I'll look to see where I'll start. Let's say I'm interested in certain strikes. I'll start going through the options chains for that expiry and see if anyone else is in on that trade. And I'll usually you can usually figure out the spreads that other people have put out there. You'll actually see like 20,000 contracts, let's say on 402, and you'll see 20,000 contracts on 350. And I'll try to follow along in that trade. I don't trade futures because I used to stay awake all night long. My schedule, I would trade futures if I lived in Europe. The only time that I trade futures now is to hedge an overnight 0-date call. I still have a futures account. I just don't bother trading it unless I'm hedging a cash market position. Time today if you're interested. I'm interested in how you determine whether we're in a trend day or a chop day. Is there a way to identify that early in the day? Yeah, you can usually identify trend days or sideways days right at the open. Not always, but right here at the. Oh, I don't know. You can't see that. Just the action off of right here doesn't look like a trend day. But if we do gap up or gap down, if we do gap up, let's say we gapped up here, I'm going to look for consolidation and move higher to show me the way higher. If we just do a straight gap up here and then immediately start to sell it down, I'll be looking for a move down for that day. And then the setups, of course, before on how many days we're going up. There's a bunch of stuff you have to look at, like are we doing a 3-bar pattern? Are we doing a 5-bar pattern, a 9-bar pattern? And that can usually explain as well. Are we in consolidation because we've made a huge move? Is it an OPEX day, an important OPEX day? And there's a bunch of different reasons we would trade sideways or have a trend day. Are you going to pay margin for 4 months in futures? No, I just think you take a cash market put spread. That's all you do. And you want to do it. You want to express that on SPX or SPY because it settles the cash. And the only other thing I would say on that would be I should do an asterisk on this trade. Always consider dividend payouts. You want to look those up too when you place a spread. You want to be checking to see if the underlying you're putting it on settles the cash. And the last one would be when are their dividends announced, and so that you don't try to close a position. You don't want to have an open position if you're expecting a dividend in the time period. You don't want to be closing one because what they'll do is you'll get margin called on your position. They'll close your position. Good time today if you're. So yeah, you want to be careful of that. The number one thing is the more liquid a stock or ticker or ETF is, the less likely you are to get your position prematurely closed. There's some other things you need to do. There's a good guy who does videos on this, and I'll try to find a link to where he discusses it in depth. And I'll post it on Twitter because I'm not going to go through it. I'm not going to go through it today because I don't want to be held to specifics without having my ducks in an order. Mostly why I trade spreads on the SPY though is due to it doesn't settle in cash. It settles to cash. It's the dividends are spread out. As a matter of fact, there was what ticker was it? There was a ticker that typically doesn't, or during COVID when they canceled dividends, it was great to trade spreads on some tickers. I forget which tickers canceled dividends, but at the time, this has been a couple of years now, but I remember there were companies canceling their dividends, I think Microsoft. No, I don't think they have dividends. I forget which tickers they were, but you could all of a sudden trade spreads on tickers without fear of having them closed out. Yeah, there's a reason for diamond hands. When to have diamond hands. Yeah, Disney canceled. I remember Disney canceled. That was good. But the lowest risk of you, I'll link the video. It's the guy that I posted with the blonde hair and the glasses. I forget his name. He's from Tasty, and he talks in depth about it. Because you might wake up one morning and they might be like, you owe $60,000, you owe $400,000, and you really don't owe that money. And there's a bunch of wonky idiosyncrasies. There's like things like always never let a spread close after hours. Like never hold it right to 4 p.m. if it's on a ticker. Never hold it to 4:15, because they can change the price after hours when the market's actually closed till 6 p.m. and hold you into your contracts still, even though you can't trade them any longer. So there's a bunch of little like rules and mechanics and things you need to know so that if you place those trades, if something bad happens or looks like it's bad, now that you know how to proceed. Matter of fact, the kid from Robin Hood that killed himself, he was stuck in a similar in one of those trades, and he thought he owed a bunch of money, and had he just not killed himself and woke up in the morning, he would have been up a couple $100,000, I think. Is it called In the Money? Is that the name of the guy? I don't know if that's the guy or not, but I forget his name. He's a cool guy, very smart trader. Technically in the back end of trades, he's very good. Yeah, there are some people that I don't know who. I don't think Misfit did. I don't think Microsoft even has them, do they? Well, they do have dividends and never cancel them. I don't remember who. Off the top of my head, just trying to bust through the Rolodex. I don't remember which companies did or didn't. This is all off the top of my head, but I remember companies did, and people started slamming spreads on those tickers. So, anyways, you do want to check the dividend dates on SPY or SPX, and I try not. It doesn't always work, but try to close those spreads before you get to those dates, and try not to have an expiry on those dates. Sometimes they don't announce them. Sometimes they're scheduled. I hope that helps you guys. And we are coming into that place. So we're looking at that big chart. You know, you could take a spread here. It's not like we're at 402 right now. So the 200-day, we're right. This is the 200-day, right? So if you were like, hey, Cap, I took a put spread into March today, or at the end of today, like right at the close, like that's another thing about spreads when you execute them. Jess, what if you guys follow up with Jess? He's a big Tesla trader. He has he DM'd me once his rules for trading spreads, and he's got a kick-ass set of rules. So if you can find him, I think his name is Tesla Jess on Twitter. Seek him out on Twitter. Just be like, hey, Tesla Jess. Say, Captain Jim James told me you've got some great rules for trading spreads. And he's got them all typed out and everything, and they're awesome. They tell you time of day to start a spread, when to close the spread, date of the week to open and close the spread. And these are rules that he lives by. Tesla Jess on Twitter. Check him out and talk to him. Maybe he'll share some of his insights on trading spreads. And yeah. Yeah, you'll see your spreads. If let's say you buy a 3-month spread, you'll see them go. You'll. It's weird. Like, so I have a friend that I used to trade spreads with. Sean, I don't know if he's listening right now. He might be listening. I remember we bought some. That similar setup right there that we're talking about. We traded some Amazon spreads. I think we paid like $5,000 for them or something, and they wound up going to not zero, but like they were worth like fucking. I shit you not. Or no, so we bought them for like $5,000. They went up to like $8,000 in profit. So put in 5, get back 13. And then they went down to like they were worth like 2 or 3 grand total at one point. And then we were discussing the spreads, and I was like, just hold them until expiry, and we'll see what happens. And so we were upside down. We ended up going into expiry. Like the third day before expiry, they went full on into the money. They were worth like $30,000 or something insane. But you know, the mental aspect of I should have taken the 8 grand when I had the chance, which is what this discussion is about. If we start heading down any time between now and 3 months, and you start seeing some sweet profit, that people have rules on that. I used to have a rule that if my spreads hit 20-30% profit, I always closed them. I took the money and ran. Some people say 50%, you close them. And there's another reason for that. Spreads sometimes will gain, not always, but average, they'll gain their first 50% of profit. And they won't hit their full potential 100% until the spread is almost in the expiry. And people's idea behind this is, well, if I hit 50%, let's say it's a 3-month spread and you hit 50% profit at a month in, you can do new spreads and hit 50% 3 times for 150%, if that makes any sense. If you were to stay in that same trade, right, that 3-month trade, you make your 50% in the first month, then you end up waiting 2 months to get the whole 100%. So the time you had to sit there, you could have made 150% instead of just the 100. And you ask spread traders, they'll tell you that they take profit anywhere from 20, 30, 50, and then re-enter a new spread, even though they have more time on it. And they'll do that 2 or 3 times instead of just that once, and then having the diamond hand and hope that it comes full max. Once in a while, you'll hit it lucky, and you'll crank down and max out at that 100% before you ever get to that 3-month mark. That's part of trading spreads, I guess. Rules you have to write for yourself when you take those trades. What I like about those trades is that if you can go into them usually with a lot of money, and they're statistically safe. Personally, statistically, the bull spreads for me are statistically better even in a downtrend. They tend to have like a high 90% win rate on the bull side than I do on the bear side, even in a downtrend. So I'm not as much of a fan on the put spreads as I am on the call spread side, on bull spreads. I used to like cut sides loose. I used to manage trades. I used to trade a lot of condors and butterflies. I don't feel like I can anymore with the way the market is. So for me personally right now, at large support and resistance zones, I just place a bull or bear trade, and then I day trade the rest of the move or the time in that trade. That's a whole nother conversation about algorithms and them destroying the markets. So I know guys that trade like that. I tend not to anymore. I felt like it was too not complicated. It was too much of a pain in the ass. It's not complicated. It's more spending all of my time managing trades. All the power to you if you're managing trades like that. For me, it's not for me in what I'm doing. But I respect that that style of trading 100%. I used to do it, so I just don't anymore. I used to run the wheel. I just don't. It's just a pain in the ass for me. I can make more in 0 to 8s typically than you can with anything. But you're talking about 10, 12, 15 years in the market. If you don't have that time in the market, it's hard to make that money. There are safer trades. You'll go through a cycle. If you guys have been trading for fucking, I don't know, 10, 20 years or something, you're going to trade every style that's out there. You know, when we go back to a bull market, my trading style is going to change. You know, when we were in a bull market, you know, once a month on the 19th, 21st, you could fucking sell the market. Well, the 12th or 14th, they'd start selling it. 21st, you'd come in and you'd fucking buy some fucking monthly calls and walk away. You just buy fucking, just calls, just fucking monthly. You'd buy like a month or 3 month out call, come back in fucking 3 weeks, and they'd be in the fucking money. So I think it depends upon the market that's in front of you, and I think it depends upon what market we have, and then hide bookmap for a minute, sure. Does that help? And if you're just joining us, you can always come back. If you go back to earlier in the program this morning, the first half an hour, you can scroll back to the first half an hour. I went through my macro view on the market, and then just about 15 minutes ago, we went through like a 5-year outlook on the market. We went and looked at a 6-month view in the market. We talked about some put spreads this morning. So there's 2 places on this stream that you could go back and look. I think it was like half an hour ago. And then right around 10:30, it's 11:40 now, right around 10:30, 10:45 this morning. And then at market open this morning at 9:30, we talked about some stuff. So you can always come back to the live stream if you want. And I show larger maps, or larger, not larger maps, larger candlestick charts earlier this morning. So yeah, our market as it is right now, that put spread would probably print regardless if we burn or you go up. Pretty safe trade. Now, while you're doing that, let's say you buy those put spreads here, right? You buy those put spreads, you're what relative safety. You'll trade the market up or down with those put spreads in the background. So you push those to the side. You'll trade the market up or down day in, day out as those put spreads sit there. And you'll get more aggressive if we start to sell down, right? You then switch to, hey, I'm going to short the market. If you break those 2 or 3 channels that we have up on charts, you get more aggressive with your trading, and you still got those put spreads in the background. If we start to trade up and break out, right? Let's just say out of hair out of our ass, the market's turns, right? You leave those put spreads on, trade the market up, make all that money on the call side, still be holding those put spreads, and then be looking for a break and to come back down to retest lows again, right? Then you close out those put spreads. So you can have 2 different positions in the market. You can be short the market and long the market. You can be short the market and short the market. Well, I guess long puts, but you know what I mean, theoretically. And still have 2 or 3 different views on the market where we're headed, and positioned long the market going up and short the market coming back down to print your other shit. So you can have, you know, bear hat on, bull hat on, same time, believe it or not. Good morning, everybody. All right, I'm going to get out of here again. I just got yelled at this morning. I pissed off my kids. I went upstairs and I played The Sound of Music really loud. Woke my children up. They had plans on sleeping in. My wife asked me to take them to cut down a Christmas tree, so I'm going to spend an hour or 2 midday.
Shell is selling stakes in UK North Sea oil fields.
And grab them a Christmas tree. Give my wife a break.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Let me know. Let me know in the chat if you think that we're going to sell off into the bell or squeeze up into the bell. Usually on a Friday, we'll on an OPEC state for VIX, we'll have something. Let me know what you think's going to happen. Have you found Trade the News to be worthwhile? I think Trade the News is worthwhile if I could listen to it on a stream. I don't like just BookMap and Trade the News is like, $1,000 every month. It's pricey. And then all the other shit that you pay for out there, it's like pricey. So like order flow, options flow that you pay for, then you got BookMap you're paying for, then you got Trade the News you're paying for, then subscriptions that you're paying for data. It all starts adding up. You guys have a great day. Flat to slightly down in the final hour. Yeah, I think you're going to see a move into this bell. I think you'll see something over here. Let me take a look and see what everybody's positioned for the close. Let me take a look and see. I haven't looked today. Let me look right now before I get off. Oh, they're just grinding options, huh? Looks like they're going to try to close it right at 402. Just killing options here. I'd suspect we go down into the bell. I would suspect that we do. Oh, everybody's inputs, though. Look at that. You guys are not you guys, but everyone's inputs for Monday. Yeah, people are already betting against the market. I can't. It's a coin flip. Hey, Chaz, how are you, brother? And why don't you guys have a good day, holiday today? And I'm gonna log off here, but I'm gonna leave the stream up, of course. Yeah, I got to do Clark Griswold today. It's gonna be hilarious. I'm gonna bring my battery. I'm not gonna bring a saw. Or a hand saw. I'm gonna bring like the battery operated sawzall with like the demo blade on it. All right, I'll check back in with you guys later today. If I can get back early enough, I'll stop in for the last hour. Maybe there's a trade in there. If there's a trade at like 3 p.m., I'll try to jump on, try to be back so that I can take a trade with you guys at 3. I'll be back. Oh, let me move this over. Let me move this over for you. Hold on. You guys want to see this right here? There it is right there for the bell. All right, I'll be back. Oh, that's my dumbass. I forgot about that. Shit. Market closes at fucking 1. God damn it. Fucking over here. Fucking. Right there. That's when the market closes. I wasn't even thinking of that. So I guess we might have some action coming sooner than later, huh? We're in power hour. Yeah. I missed you too, Satchel. Oh, yeah. I knew it was a half day, but I forgot. And I haven't even started drinking today yet. After all that eating yesterday, I'm like, I got to drink. I've been drinking pounding water all morning. Had a little bit of coffee. That might work right there. Uh, 405's up here, right? How much do 405Cs cost? What time is it? Dude, I'm going to get in so much trouble. There's like 12 minutes left until the power hour. Kids are gonna be mad. Let me look and see. Looked earlier, but .403s look juicy. 403Cs at 17 cents look pretty juicy. Let's see if they can grind them down a little bit more. It's so terrible. This is going to be awful. Hang tight here. I want to look at something. I'm a little bit farther back in time here. Hang tight for a minute. Let me, I'm going to, just a second here. Hold on here.
At 12 p.m. Eastern Time, we get ECB's De Guindos speaking.
Ouch. That's not good. It's a nice little bull flag up there, isn't it? There's top up here. This is that 4050 right here. So I guess the question becomes, do we have a trade here? I'm going to roll down. That's one trade that's setting up. Next trade would be a move here. And then something like that. Those are the two trades. What if you want the bearish trade? You're going to want to see a failure in here. And then you take that down. So you're looking for, if you want to buy some puts, bearish below, bullish above. Watch out for this one right here. This is the one that can sneak up, and this is the bull. The bull trap is right there. But you could probably trade this from here to here, and then you'd want to, trade each level. What you don't want to see happen is this, and then the fucking reverse right down to the depths of hell into the fucking close. That's the one I'd be looking at right now. Let's see how this works out. There is some mechanical problems. There's 205,402 Ps expiring today. 205,000, and it's growing. That shows it's trying to pin the market from going up. The question becomes, do the dealers want to pay 205,000 contracts that are 18 cents into the close, or do they want to burn them? So my thought process would be that they're going to try to burn them into the bell. So my bias is going to be to up into the bell. So between 12 and 1 o'clock, my bias is a move here into the close to burn all these puts. That's what the max pain is right now. Burn all those puts. But if there is a break below or a failure on that, if there's a failure on that trade, I would be buying some puts right about anything below this. I'd be buying puts. There's only an hour left, so I'd be buying puts right there. So my bias is long into the bell.
At 12 p.m. Eastern Time, ECB's De Guindos will be speaking.
How do you like that for a bias? Let me know in the chat if you agree with that. We're going into no power hour cap. Think they trade it down? I think I just talked about all that, right? You guys heard my take on this? There's 206,402 Ps out there. Question becomes, do they allow them to print into the bell or don't they? The dealers probably want them to expire worthless. They're at 18 cents right now. Is it Mike? It's the blonde guy with the glasses. I'll find the video. It came out a couple of years ago. It might be like a year or two old, maybe longer. Might be like a couple years old. I think he did a couple of videos too. I think there's like 2 or 3 videos he did on the topic. And just take down notes. You want to keep those notes so that you're aware of pitfalls, even if you make the right trade. Pitfalls that can come into trading basic spreads. So far, this is pretty bullish. So just everything's saying we're going up into this bell. The only other thing that could possibly happen would be that they trade it sideways into 1 o'clock. So to take a put trade into the bell, probably need to be below this. You'd need to be below. Oh, hold on. I'd want to be below that line right there, that yellow line. And this, I'll make that green. Maybe that helps. Or here, I'll make this red. Right there. And the trap is right here, if there's a trap. If there's a trap, it's right here. But you could probably take this up, just this move right here. We'll see. And why, you might ask yourself, why is he saying that? It's because of back here. It's where the sellers were, but you can't see it. Right where my cursor is over here on the left. This is where the initial sellers come in. They came in again, they sold it down, they came in again and sold it down, they came in again and sold it down. Now, BOOKMAP is showing you that those sellers aren't there, or at least they're not. BOOKMAP's showing you that the sellers are weak. There's a magnet above to 4050. So we'll see. Yeah, the only thing I would be thinking about are people closing spreads at the last 15 minutes or so. That would be the argument before we trade sideways right into the bell.
Shortly expecting comments from ECB's de Guindos.
And I don't know what Max Payne is today. Oh, look. See what Max Payne says. You guys know what the Max Payne is today? I don't. I haven't looked. All my thing. So 398 is Max Payne on today. I don't know how accurate that is. So Max Payne is actually lower. Maybe they do print it. Maybe they're right. So we'll put Max Payne on here. Not that that ever works itself out. Sometimes it does. Max Payne is down right here at S2. Yeah, let me look at. I haven't looked around the market. I'll look around the markets right now. Let me take a trip around the market and see what's going on. J&K is falling off. HYG is falling off, closing some gaps. VIX, it's not really telling me much. Dixie's found some sort of a bottom here. That's not good.
So according to diplomats, today's meeting of the EU government representatives on the oil Russian price cap has been cancelled. Again, diplomats here citing that the Friday meeting of EU government representatives on the Russian oil price cap has been cancelled today.
Hold on, I'm still looking around.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Looks like the SPY just turned negative. HYG is rolling over. I'm just telling you down. The VIX got bought at $20.32. So I guess there's some information saying we're going down into the bell. I'm unsure that I have much bias here, or that I'd be taking a trade here. What this looks like to me, I wouldn't. I was saying I have a bias for the upside, but now I'm thinking down. I'll be honest. J&K and HYG at least are saying down. Yeah, they're selling off right now. look back at the options chain. Now there's 214,000 puts
Just
at
seeing
16
just a report
cents.
following on from the EU diplomat statement earlier, saying that no oil price cap discussion today. Seems that none are planned for this weekend either. So again, that's from Wall Street Journal reporter Norman on Twitter.
Hold on. Yeah, I'm not in a trade. I am flat. I don't have an opinion on the moment. I don't have an opinion on where we go. If we make a move, I would have an opinion. if we did something like trade down here, probably take that part of the trade. Or if we bumped up here, I'd probably take that part of the trade, like the second part. I'd take that part of that part. But I got no conviction either side right now. Let me know if you do. Apple is screaming higher, which tells you up. I like Apple and Tesla as indicators. They're like my fifth and sixth indicator. I like them though in conjunction. I don't like the divergence. I never like seeing divergences in HYG and JNK. I want to see them. I mean, they're in a bull flag, but I guess you could say that's bullish. I want to see HYG start ripping before SPY does. I want to have cheats in my hand before I take a position. Some big red balls coming into BOOKMAP right now. Still some decent support. That's one other thing you could look at on BOOKMAP right now at the 4030. There's 204 buyers. Sellers are kind of weak above. There's a magnet at 4050. Magnet's still there. All right, you guys ready? Hold on, I gotta add them up. Speed up your playback. Probably gonna lose my ass in this trade. All right. I'm in 403C expiring today. It's 12:07. Got an hour left. I'm gonna get fucking smoked in this trade. I already know it. I can smell. I'm gonna get I can smell how the rest of this broadcast is gonna go. Close the week out with a fucking L. Right on, right on. Thanks for the support, Pinky. I appreciate it. I'm gonna put a stop loss on this at 7 cents on 403Cs. Fuck, I don't know why I'm in this trade. This is so fucked up. Probably trade it sideways right into the bell. Fuck everybody. I'm gonna keep an eyeball on HYG here. I'm close to getting stopped out. We're down to 9 cents on those calls. We just got a few more pennies to go. Starting to see some sellers come in right now. Hold it together, SPY. Yeah, condors and flies at the open was awesome if you were in them. Absolutely. Coming in some low volume sellers. Oh, no, they're stepping down now. Be careful here. Got some sellers stepping in right now. I'm probably going to get probably going to get kicked out here. Sellers are stepping up their ramp. You can see them. You can see them on BookMap. See the 289 sellers now on 4035. Come on, hang on there, calls. Hang in there, calls. Don't fuck me. People closing out for the long weekend. I'm going to get the boot here shortly. I'm close, like next 30 seconds to a minute, I'm probably going to get kicked out of this trade. They're fucking trying. They're looking for a break here. Burn those fucking puts. Want those fucking puts to get torched. I want every one of those fucking I want every one of those fucking puts to go to zero. Yeah, the sideways, I mean, we're not getting a move right now. We're in the last hour, right? It's already 12:11. We're not seeing a directional move here. That is cause for concern. We should be seeing something here. We're not seeing it. I mean, the market still trades after it closes, right? I think futures market is still open afterwards. So it's not like the market actually closes. I don't think it closes. I think that the market continues in futures. Sellers keep stepping down. I'm down 2 pennies right now. Does futures market close? I haven't looked. I got my eyes. I'm really watching my calls here. Let's see. CME Group holiday calendar. What we got? Thanksgiving. I don't see it for today. Thanksgiving 20. I don't want an Excel sheet. Does anybody know off the top of their heads? Post it in the chat. There's holiday hours for Thinkorswim. Let's see here. What am I looking at here? Thanksgiving says that there are abbreviated hours. No, that's for Thanksgiving Day. Looks like I think futures is open. It says it looks here like futures is open after we close today. So unless yeah, I'm just sitting. My fucking calls are about to bleed out here, so I'm gonna end up having to fucking shut them down here. I haven't closed them yet, but I'm trying to give the benefit of the doubt that there's gonna be a green bar or red bar to hell, one or the other. Slam the the slut machine. the nickel sluts. What's a dime slut, right? Ain't shit happening. We're just gonna grind this right into the bell. To get your moving futures. Come on, baby. Come on, show daddy we're going up. Take the contrarian trade against Max Payne here. SPX is up so little that SPY is still down on the day. Yeah, there ain't shit happening. You know how this goes, though, too, right? If I close this trade out. Oh, here we go. So in HYG, we're coming to the top of a key. You're going to see a move here shortly. Oh, shit. Yeah, I'm probably going to get kicked out here. Rightfully. Yep, I'm kicked out. Okay. I'll show you something else. So I just got kicked out. This is HYG. HYG should prove we're not always. You'll see fucking but HYG here, if you get a failure, should be bad for equities. Get the push up, should be good for equities. A little bit of a gap to fill above here, and there's a big giant gap down below. If you get the reversal here, on HYG into the bell, that would make equity markets go down pretty decently. So you're probably gonna get a move. Probably gonna get a move here into the bell, some one way or another. I just got kicked out of my trade. I just lost three pennies. So that was my one for trade for today. A loser. Born the U.S. Inflation Act must not distort competitiveness. Yeah, there's no news today either. You think we bleed into the close? Yeah, bleeding makes sense. People just sell out of their positions, start again on Monday. But there are a ton of fucking puts out there. There's now 224,000 puts on 402p. I'd like to see him smoke those fucking puts. What have you been buying all day long? Just bought deals and others. What did you get for gift cards? Where'd you get gift cards at for 20% off, Winky? Hook us up. Tell us what's up. I'm glad I didn't stay in that trade. Those calls are now down to 6 cents. I would have been getting smoked in that trade at this point. That would have been a 40% fucking murder. 30% is good enough for me. DoorDash 100 for 80? No, I don't use DoorDash. I used to. I don't anymore. That's a great one, though. That's a great gift card. I don't know what we're looking. I know my daughter wants her. She wants us to pay for her driver's ed. And so that's a big one for us. Dude, like I don't know if you guys have kids. So when I was a kid, right? Took driver's ed, got your license. You could buy like a shit box for like $500. Where I lived, insurance wasn't required. And there were no restrictions. And they started putting restrictions on when you could drive. Like my oldest now in Michigan, where we live now in Michigan, it's basically they don't want your child driving until they're 18 years old. So if your kid's like 15, 16, your insurance is through the roof, like through the roof. Thousands, like $4,000, I think, to put her on our policy. Couple $1,000 for a driver's ed. Then they have crazy restrictions, like they can't drive at nighttime. They can't drive with their friends in the car. They can basically only drive with you in the vehicle with them. And of course, I'm like, I don't want to I'll teach my kid how to drive, but I don't want to be going anywhere with her. No offense to my daughter, but I don't want to spending 2 years driving with her. I'm going to more than likely want to be the driver because I don't trust a young person driving, of course. I mean, teaching her how to drive is one thing, but so they're like, oh, so then you have to, you buy the car. Car prices of cars have gone through the roof. So I'm like, oh, this thing cost me like fucking until she's 18 is going to cost me like $20,000-$30,000. Like, this is insane. I'm like, there's no reason for you to have a car. You might as well just get an Uber and have them shuttle you everywhere. Like, that's fucking insane. So I tried to tell her not to get her license, but she's, a kid, so they want to have license, the car, the wristwatch, Apple wristwatch, the Apple phone, all that stupid shit. Kids are not cheap. So what am I looking at? I'm wondering why they're adding puts. And so this is like a dealer or a bank, and what they're doing is they're trying to pin the market. We've got too many calls in the market. So let's just start with the baseline. We've got way too many calls in the market. That's why we have someone was asking what's going on. So let's start at the baseline. There's a shit ton of calls in the money. They're in the market, right? So dealers have to get delta neutral into the bell. And you've got call spread holders that want their calls to print into the bell. So the max pain against those call holders is that we trade down to 398. Now that could happen after the bell. This could happen between 1 and 4 p.m. Not necessarily right now. And then you've got dealers that come in like little tinkerers, right? Like little gremlins. And you got banks that come in like little gremlins. And what they'll do is try to manipulate the market to print to a certain number. And they already have all this data. So right now, currently, what you're seeing is a little gremlin come into the stock market in the options chain. And they're adding and adding and adding and adding to their put positions. Trying to either pin the price or bring the price down. This could be the dealers doing the same thing. Now you don't know in the background how all this is being expressed. You don't know what the positioning is. You can make assumptions as to what the positioning is, but there's no guarantees as what the positioning is, what they're actually trying to print or not print. So this could just be basic.
A reminder for our users, the US cash equity markets will be closed at the top of the hour today, so that's at 1 p.m. Eastern time or 6 p.m. London time.
You got trading firms, HFCs that are doing this, high frequency trading firms, HFTs, I mean, not HFCs. This could be dealers. It could be just a hedge fund. It could just, and they're just trying to pin or push the market or hold the market or dump the market. You just haven't seen this much of it. It's been becoming more glaring and glaring over time, this past year specifically. But it started like 3 to 5 years ago. It's become more apparent. Talk about our conversation on Twitter. I don't know what the conversation was. I'm trying to watch I'm trying to watch right now to see if we're going up. I think we're gonna go right to the bell sideways. But there's a ton of fucking puts in here, man. Are they gonna print those? I don't see like all these puts that are coming in the market. Now we're up to 233,000 puts. My instinctually, my mind is telling me that they're gonna squeeze it up and burn those fucking puts into the bell. I'm gonna try to fucking torch them. But whatever. What do you want to talk about yesterday? What's your conversation on Twitter? Matthew, you want to talk about the Delta Neutral trade? You can see it live right now. You can see it in the options chain. They just keep adding and they're adding and they're adding. Right now, they're doing it right now. These aren't retail traders. This is a dealer or a bank. And someone has to take the opposite side of that trade. So I think like 20 minutes ago, there was like 200,000 put contracts on 402. And so if you see 234,000 now, the dealers will likely have to take the opposite side of that trade, right? That's the consensus, right? So if I come in and I place
oil prices extending their losses as Brent crude falls $1 to session lows.
So if I'm a trader and I come in and I buy 100,000 contracts 402p right now, the dealers are going to come in and they're going to have to take the opposite side of that trade. And how they express that depends. They could just go long stock, right? Just buy the underlying, creating demand, artificial demand in the market. If they don't buy enough, synergy of banks using data being abused by banks in a higher time frame. More Twitter employees got fired. Oh, synergy of banks using data being abused by banks. Yeah. So the other aspect to this is that it's not just banks abusing. It's retail traders are doing it. Banks are doing it. Dealers are doing it. You saw an article come out last week that was a puff piece with the NASDAQ and what's their names? I forget. Brent Klobuchar or whatever. It was like a puff piece on the options market's impact on the price of everything, and I was like, man, did they figure out something was going on in the back room that they're not supposed to be doing? So they do puff piece. I don't know. It's a bigger conversation for later. I had to do more research before I start making fucking wild accusations. Looks like a pen, doesn't it? Yeah, Spot Gamma. They had a puff piece on NASDAQ. I was scratching my head. It was like, man, that looks like Spot Gamma wrote that article and fucking NASDAQ just posted it. Doesn't look like NASDAQ actually did any fucking kind of interviewing. It just looked like they got busted with something and NASDAQ was like, you know what? Just don't say anything and we'll give you a puff piece to pump your service. That's what it seemed like. It was like a lookbook or something. That's what it reminded me of. It was like a lookbook. You know it's just garbage. Yeah, Spot Gamma. My thought is that Spot Gamma found some data that was kind of a head scratcher. Yeah, this is all pinning, right? Those 403Cs are at 8 cents, going nowhere. I'm going to wrap this up here. It's let me see here. It's 12:28. We have a half an hour left. I'll leave the stream going until 1:30. It might stay on. I'll ask my wife to turn it off for me. But I expect a newsletter to come out over the weekend. Expect the service to roll out between now and Sunday at some point. I'll have the service up running with a banging version of all the stuff you guys like to see. I don't know how it's gonna roll out. It'll either roll out where there's like a public day trade every Monday or something, and then Tuesday through Friday will be private. We're gonna still leave the Discord open to whoever was in before, and then we'll anyone that was already in and not Captain's Alpha, that kind of stuff. But if you want the premium kind of like the shit that cost me a ton of money, I'm gonna need support on running that part of the service. Like the stuff that's gonna cost, like the stuff that cost me like 30, 40, 50 fucking $1,000 a year. That shit's like that shit's gonna need help. I'm gonna need some community help on that. Can you look at Activision and MicroStrategy? I can't look at it at the moment. You know what I'll do is I'll write it down and I'll write something on it. I'll try to make a post on Activision and MicroStrategy. I did see that they were moving today. I think I did. I thought they were on the movers this morning, but I'm not positive. You guys have a great weekend. We ain't doing shit here, are we? If I had to guess, they're gonna make a move after the market's closed, between like 1 and 4 p.m. If you want my take on if you should be long into Monday, I would be flat, or I would be in put spreads before the end of today. You could see, I guess, a pump into the beginning of next week, possible. They like to reset over. So holiday weekends, they tend to reset that Monday. We have JPOW on the 30th, so maybe we don't get the reset until JPOW. If you're going to be short, I guess here, I would be doing it. I would be expressing it in short the market or long puts. I would be expressing it in a put spread to save yourself a headache on a squeeze up over the weekend. Then we sell Monday. You don't have to deal with that volatility. Go back in the video. You can see where I talk about this is the time to start considering putting some put spreads with some time on them, even if they're in the money, so we can come back down here and revisit some of these lows again in the future. I haven't put one on yet. I'm probably waiting till we get to the top of the key, somewhere around 406, 408. I want that best positioning. I'd really like to sell like the JPOW Bear suit, that shit that comes out on the 30th. I'm looking for real volatility on that day or leading into that day. Although today is not a bad place to place some spreads into the close. If you're going to place a spread in the close, maybe wait until the last 15, 10 minutes or so. See if we start making moves. If we squeeze higher and you can grab spreads higher, that'd be sweet. Some put spreads. But I'm not ready to get short yet. I'd like to really get short like Tuesday, whenever that fucking speech is. If that speech is on, when is the 30th? That's in 5 days, right? So, yeah, that's Wednesday. I'll wait to put my put positions on, my put spreads on until JPOW comes out and gets all bearish on us, slaps us in the wrist, tells us the market's going down. Yeah, PCE too. Yeah, when is PCE, Mo? Is that on Tuesday? We should look at that before you get off here, right? The economic calendar for next week. We're over here throwing shit around and we're not even looking at, or I'm throwing shit around, I'm not even looking at the economic calendar. We got durable goods. So, no, wait a minute. That's this week. Next week. We got Bullard coming out at noon on Monday. Home price index on Tuesday at 9. Consumer confidence at 10. Big ones, though, like Wednesday, ADP employment report, GDP, job openings, quits, pending home sale. I don't know. JPOW's the big one, 130. PCE's not till Thursday. So real volatility comes in on Wednesday. So I might wait. Yeah, I'm gonna wait till like probably Tuesday or Wednesday, somewhere in there. Maybe Bullard gives us a reset on Monday, pump back up, then we do the roll heading into Wednesday Doom. Good eyeballs on that, Mao. Thanks for saying something. Discord link is on my Twitter public page. My latest post has the Discord link in it. Hope you guys have a great weekend. Get rested up. Spend some time with your families. If you don't have families or friends, try to grab a nice book. Go for a walk. Get outside of the house. Whatever it is you're going to do out there. Rest up because we have a big week ahead. We've got some big events, right? We've got PCE. We've got Bear Pow coming out next week. We've got the FOMC meeting on the 14th, I believe, of December. That's another big one. Do we get any kind of continuation of a Santa rally? All those big questions. We're coming into a huge resistance above here. A huge channel, right, is above here. We're at the 200 MA right now, SMA, daily moving average. As that is right here at 402. So we've got some bearish reasons to be bearish where we are right now. So we have definite reasons to be bearish at the 200 MA. The bears want to defend the 200 MA. We've got the channel above at 406, I believe, somewhere around there. So there are some reasons to load up on some put spreads now. I can't blame a bear for wanting to load up today. I want you to keep those words in your mind that if you're a bull, you know, the signs are coming to start that to see some weakness. You got the 200 AM at 200 SMA. You've got the bear channel trend down at the SMA is at right here at 402. We've got the top of the channel at 406. We've got JPOW PCE. We've also got the weakness for the FOMC meeting, and we've got end of year selling. So those things are starting to stack up. If you're going to take a long, you might win 1 day or 2 days, but start thinking about positioning for some kind of a trade lower. We're kind of there. Like we're starting to enter that. Let's start thinking about some protection. Does that make sense? So yeah, if we were to get a squeeze up today, you know, no squeeze up off the bell, trading sideways, reset on Monday. Then we've got the middle of the week drama, soap opera stuff. Well, that's all I got for you guys. Have a great weekend. I will tune in to make sure you tune in. Look for a newsletter to come out over the weekend, and I will tune in with you at 9:30 a.m. on Monday morning, of course. And I'll leave this stream up into the bell at 1:30. And you guys have a great weekend. I hope you guys had a great weekend with your families or by yourselves or whatever it is. Any of you guys out there that are still tuned in, there's not many of you left out there, but if you are and you're having a tough go of it, of the holiday, try to make a phone call and reach out to someone that you know. If you don't know somebody...
Wall Street Journal reporter via Twitter here again, confirming that no plans for Russian gas price cap talks are going to take place over the weekend. They say that nonetheless, a variety of EU sources still think that a deal will come in the coming days.
Could smell that ripping Brent. Hey, you guys have a wonderful weekend. Try to be Femnon Patel. I saw your
allows you to actually hear order flow in futures, forex, and stock instruments.
I saw your Twitter
at tickstrike.com.
I saw your Twitter post to me. If you can DM me, I'll send a DM back to you and try to set up a questionnaire with you if you want to come on the show, and we'll try to get you on the show at some point in the coming weeks. So I did notice. Uh-oh. My battery just kicked out on my my BOOKMAP. I didn't have it plugged into a source. Looks like I'm going to end this stream early. So Femme Fatale, yeah, hook up with me via DM. We'll chat and see if you'd make a good fit, and we'll see if you make a good fit into being an interview subject. We'll talk about what you want it to be, what you want to talk about. Yeah, but I don't have that computer plugged in right now. I tried to get this going quick this morning. So into the close today, you guys only have a half an hour left. I'll just leave this chart up for you. This is the same. This is exactly what BookMaps is showing. And send me a DM and I'll talk to you. I'll talk to you about some topics you might want to discuss, and we'll go from there. You guys all have a great weekend.
just seeing a piece of research here about 3 hours old from RBC Capital Markets, Halima Croft, who says that at this point it's about inflation reduction instead of the Russian revenue reduction with regards to Russian price cap talks. Just in the market on close imbalance, currently at 907 million to the buy side.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.